Greetings to you all and welcome to the revision session of the financial accounting paper that was done by CPA and CFA candidates on Monday, 4th of April 2022. This was a morning paper. The candidates were expected to answer 5 questions in a time period of 3 hours. And in this session, I'll be tackling a question at a time. In this first session, I'll answer question number 1. In the next session, I'll answer question number 2 until we complete the 5 questions. It's my hope that you are ready to revise. I also hope that you attended the class lectures where we took you through all the topics as per the 2021 KASNEB revised syllabus. Welcome to the lesson. Question 1 of the financial accounting paper that was done in April 2022 reads as follows. Part A, highlight 5 elements of financial statements, 5 marks. I'll first answer that one. Elements of financial statements. So candidates, what are financial statements? Financial statements are also known as the final accounts, and the main financial statements are the statement of income, or what we call the trading profit and loss account. The second one is the statement of financial position, also known as the balance sheet. The examiner required candidates to highlight 5 elements. The candidates who understand English did not have any problem answering this question, because if you know the meaning of elements, what is an element, then it becomes very easy for you to answer such a question. An element is a segment. An element is a constituent of something. An element is a section. The candidate required, the examiner required candidates to highlight 5 elements of financial statements. 5 elements of financial statements. This is financial accounting. We are revising the paper that was done in April 2022. Question number 1. A, elements of financial statements. I've said the main financial statements are the income statement and the balance sheet. So what are the sections in a statement that is known as the profit and loss account, the trading profit and loss account? So if you are to look at an income statement or a statement of financial position, you'll find elements like revenues. And in a short while, we are going to be preparing a statement of profit and loss account. When preparing a statement of profit and loss account, which is a financial statement, the first section, the first element, the first segment is revenues. The second element in a statement of profit and loss account is what we call expenses. So these are the main elements in a statement of profit or loss account. Then the main elements in a statement of financial position, the main elements, we have assets. We have number 4, liabilities. Number 5, what we call equity. So these are the main elements of financial statements. Revenues. Now, what are revenues? Revenues are increases in assets or decreases in liabilities. What are expenses? Expenses are decreases in assets or increases in liabilities. When liabilities increase, then that is as a result of the expenses. Then there is assets. What are assets? Assets, or an asset, is a present economic resource that is controlled by an entity as a result of past events. What are liabilities? Liabilities, or a liability, is a present obligation of the entity to transfer an economic resource as a result of past events. How about equity? Equity learners, is the residue interest in the asset of an entity after deducting all its liabilities. We know from the balance sheet equation that assets equal liabilities and equity. So if you are to make equity the subject of that formula, then equity will be equal to assets minus liabilities. So these are the main elements of financial statements. Example of revenues are things like sales, right? Revenues are items like discount received, commissions, and so on. Expenses are like airtime, telephone expenses, transport expenses, insurance expenses. You can name them, all right? Assets are like land. Land is an asset. Buildings are assets, all right? Prepayments, prepaid expenses are assets. Inventories is an asset. Then liabilities, accounts payable. Loans, those are liabilities. Okay? Equity, we're talking about here, capital. Reserves. Premium, share premium, and so on. So this would earn you how many marks? 5 marks. Identifying the elements will earn 5 marks. 1, 2, 3, 4, 5 marks. Let's now move on to answer part B. I read, Fatuma Ali commenced business as a retail chemist. Fatuma Ali commenced business as a retail chemist on 1st January 2021 with an initial capital of 30 million shillings, which she paid into her business bank account. She hired a shop manager at an annual salary of 2 million shillings. In addition, the shop manager is to receive a commission of 10% of the gross profit. During the year ended 31st December 2021, Fatuma Ali did not maintain proper books of account. After an examination of the available records, the following information was extracted. The bank statement for the year ended 31st December is as follows. We have the receipts and the payments. Then below the bank statement, additional information number 1, I read, all sales were for cash and sales are banked. All sales were for what? Were for cash, and sales are banked daily, subject to the retention of a cash float of 100,000 shillings. The following payments are made out of cash sales. We have the manager's salary, drawings, payments to suppliers, general expenses. Note number 2, I read, as at 31st December 2021, checks sent to suppliers amounted to 2.5 million had been presented to the bank for payment. Number 3, as at 31st December 2021, invoices from suppliers amounting to 8.6 million had not been paid. Number 4, as at 31st December 2021, inventory was valued at 36.5 million shillings. Number 5, depreciation per annum is to be provided on material vehicle at the rate of 25% on cost and on the shop fittings and equipment at 10% on cost. Note 6, during the year ended 31st December 2021, Fatuma Ali took goods which cost 100,000 shillings for her personal use. Required 1, statement of profit or loss for the year ended 31st December 2021. How many marks? 8 marks. 2. Statement of financial position as at 31st December 2021. How many marks? 7 marks. 7 marks. This is part B. Statement of profit or loss. The name of the business? Fatuma Ali. Fatuma Ali. Fatuma Ali. Fatuma Ali. We are preparing statement of profit or loss as at what? For the year ended, the period is 31st December 2021. 31st December 2021. This is a statement of profit or loss. And in part A, we said that the elements of a profit or loss include revenues. So we're going to begin here with the revenues. The revenues are in millions. Fatuma Ali revenues. So the first revenue here is the sales. Sales. For us to calculate sales, we need a working because the sales are not provided clearly in the question. Why? Because Fatuma Ali did not maintain proper books of accounts. If Fatuma Ali prepared proper books of account, then these sales we need to pick it from the trial balance. But here there is no trial balance, therefore we are going to use the information provided to determine the sales. So working number 1 will have sales. Working 1. And from the receipts, from the bank statement, we can see we have sales amounting to 123,720 shillings. In addition, information number 1, we read that all sales were for cash and sales are banked daily. All sales are what? Were for cash. That means the customers were not allowed to pay by check. It was just by cash. And sales were banked daily, subject to retention of 100,000 shillings float. So the payments that were made out of cash sales, we have manager's salary, drawings, payments to suppliers, and general expenses. That means that when Fatuma Ali received cash from the customers, that cash was used to make cash transactions. And they are listed. So when preparing the sales account, these are the items to include in the sales account. Working 1, these are workings. 1 sales account. Sales account working 1. Now in note number 1, candidates, we read that all sales were for cash and sales are banked daily, subject to retention of a cash float of 100,000 shillings. So all sales were for cash. What does that mean? That means that Fatuma Ali sold on cash basis. The customers paid in cash. And all the cash was banked. So if we check the bank statement, you can see the second item on the debit side of the bank statement reads sales 123,720. So that's the first item to recommend to record in this account. Bank 123 123,720,000. So out of the cash that was received, 123,720,000 was banked. But we read in note number 1 that not all the cash that was received was banked. Part of that money was spent, and we've given the items here. So we're going to prepare another account, which I'll call cash account. The cash account, because some of the sales that were received were paid out of cash. And the first item there is manager's salary. The manager's salary was paid out of cash, because when you pay salaries, you credit the cash account and debit the salaries account. So here we have 1.98 million. 1.98 million. The second item, drawings, 4 million. The third item, payment to suppliers. Suppliers were paid how much? 1390. General expenses. General expenses amounting to 840 was also paid from cash. Then there is also the float. Retention of 100,000. Float of 100,000. So these are the payments that were made out of the cash sales. So I'm going to have the total 1980 plus 4 million plus 1390 plus 840 plus 100 is 100, which gives me here 8,310,000. 8,310,000. So the balancing figure, we need to balance this account by transferring all these amounts, which is a total of 8,310,000. This amount we transfer to the sales account. Sales account. So this amount is transferred from cash account to the sales account. So we record here cash 8310. 8310. So these two will constitute the sales for the year. So there are sales that were banked and sales that the amounts that are used to pay these expenses, 8,310,000. I'm going to get the total 123,720. The amount that will be transferred to the statement of profit and loss is 132,030. 132,030. 132,030 is the figure for sales, working number 1. 132,030,000. 132,030,000. That is sales for the accounting period ending 31st December 2021. So what is the cost of these sales? Cost of sales. We read from this question that Fatuma Ali commenced business as a retail chemist on 1st January 2021. That automatically tells you that Fatuma Ali did not have opening inventory, because it's only been in operation for 1 year. So there is no opening inventory, but we have purchases. Purchases. Again, purchases are not provided directly from the question, because the businesswoman did not maintain proper books of accounts, because if proper books of account was prepared, then we could simply pick the purchases from the trial balance. Therefore, we must have a working for purchases. Purchases account. This is working number 2. Purchases account. We'll go through the question and identify all the items that are to be effected or to be transferred to the purchases account. And I want you to look at the bank statement first of all. The bank statement, we have payment to suppliers of 112,360,000, payment to suppliers. You can see the bank statement is credited. Therefore, the purchases account will be debited with the bank. The amount there is payment to suppliers 112,360. Then additional information. We read in note number 2 that as at 31st December, checks sent to suppliers amounting to 2.5 million had not been presented to the bank. So suppliers were paid there. We have checks amounting to 2.5 million. 2.5 million. Those are checks. Note number 2. In note number 3, as at 31st December, invoices from suppliers amounting to 8.6 had not been paid. So these are invoices. Invoices amounting to 860. This is 8.6 million. 8.6 million had not been paid, so we debit the purchases account with 8.6 million. Then depreciation. Note number 6, we read, during the year ended 31st December 2021, Fatuma Ali took goods which cost 100,000 for her personal use. That is an amount that we'll have to have it here as drawings. Drawings, we'll have drawings there. Then we see in note number 1, payment to suppliers. That is payment to suppliers, cash payment to suppliers. Out of the sales that were received, suppliers were paid. As we saw here, suppliers were paid. These are purchases, 1390. So these are the items that will enable us determine the purchases for the year. Purchases for the year. We are going to get the aggregate. Aggregate. We add 1,2,360 plus 2.5 plus 86 plus 1390. The total 124,850. So this is what will be transferred to the statement of profit or loss. 124,850. 124,850. 124,850 is the value for purchases. 8. This is 124,850. 124,850. Then there is the drawings of that is the last note. During the year, Fatuma Ali took goods which cost 100,000 for her personal use. These are drawings of 100,000 shillings. Drawings, 100,000 shillings. The drawings reduce the reduction in the goods that are available. Then do you have closing inventory? Closing inventory. The closing inventory note number 4 was valued at 36.5 million. Closing inventory Closing inventory note number 4, 36.5 million. So that will be the cost of sales. We're going to add 124,850 minus 100 minus 36.5. Cost of sales 88,250. Deduct cost of sales from sales of 132,030. The gross profit 43,780,000. This is the gross profit. I hope you are also confirming, candidates, the figures, the gross profit. Are you arriving at 43,780,000? Yes. Then the second element in the statement of profit or loss is what we call expenses. What are the expenses? We again run through the question, identify the expenses. First of all, let's look at the bank statement. Are there expenses from the bank statement? Yes, we have interest on bank loan. Interest is an expense. Interest is an expense, 1 million. Then there is the general expenses. General expenses will have a working for general expenses. Why? Because general expenses were paid through the bank. Then there were also that were paid out of cash. General expenses were paid out of cash. General expenses will be equal to the amounts that were paid through the bank of 83.35. So we have 83.35 plus the amounts that were paid from cash note number 1, general expenses 840. These two will give the total value for general expenses 83.5 plus 840. General expenses 91.75. 91.75. That's the value for general expenses. Then from the bank statement, rent was paid. Rent is an expense. Rent is an expense, 37.50. 37.50 is the value for rent. Now let's check from additional information. Do we have any expense? Manager's salary. Manager's salary is an expense. Manager's salary, that is an expense. Manager's salary is an expense. And you recall, candidates, that in sentence 2 of the question, that Fatuma Ali hired a shop manager at an annual salary of 2 million. In addition, the shop manager is to receive a commission of 10% of the gross profit. And from the trial balance, I mean from the bank statement, there is no payment for the manager's salary, neither the commission. But in note number 1, you can see that the manager was paid 1,980,000, meaning that this manager, there is salary owing. The business owes the manager some amount, because the amount ought to be 2 million. But for the purposes of preparing the statement of profit or loss account, we need to indicate the total value, whether the money was paid or not. So the manager is paid 2 million. Are you clear on that? 2 million. That means that out of this 2 million, only 1,980,000 was paid, but 20,000 is due. That's outstanding manager salary. Then below here, we need to indicate the commission. This manager we read is also paid commission of 10% on gross profit. So 10% of gross profit, the gross profit 43,780. 10% of 43,780 is equal to 43,78. So 10% of 43,780,000 is equal to 4,378. That is the commission. Is there any other expense? Yes. Look at note number 5. Depreciation per annum is to be provided on motor vehicle at the rate of 25%. Depreciation is an expense. Depreciation. This depreciation should the rate should be applied on motor vehicle, one motor vehicle. The rate for motor vehicle is 25% on cost. So this is 25% times the cost. The cost is to be found in the bank statement. That is item number 3 on the credit side of the bank statement, motor vehicle 2740. 2742,740. So 25% of that is 2740, which is equal to 685,000. That is depreciation, motor vehicle depreciation. Another asset that is depreciated is fixtures and equipment. Fixtures and equipment is to be depreciated at the rate of 10% on the cost. So let's identify the cost of fittings and equipment. Fittings and equipment is the second item on the bank statement. That is 8,800,000. 8,800,000. 10% of 8,800,000 is 880,000. So candidates, what else do we have here? Going through the question again, I don't see any other expense. We have salaries. That is manager's salary. We've identified it and recorded it. These are the only expenses. So you're going to get the total expenditure, then deduct from the gross profit. Total expenditure 1 million plus 9175 plus 3750 plus 2 million plus 4378 plus 685 plus 880. Total expenditure 21,868. Deduct from gross profit of 43,780 is equal to 21,912. That's the net profit. Net profit. Net profit. 21,912,000. We've answered part B. Let's answer part C. That is part. This is B1. Then B2. The statement of financial position for Fatuma Ali. Fatuma Ali. Statement of financial position as at 31st December. Statement of financial position. What are the elements of a statement of financial position? Assets. the first element. We're going to record the non-current assets first. Non-current assets. So we're going to have here the cost, net book value, the depreciation, and the cost in thousands. The first asset is leasehold premises. Leasehold premises, 20 million, zero depreciation, 20 million book value. The next one is fittings and equipment. Fittings and equipment, cost 8.8 million. Depreciation on fittings, these are fittings and equipment depreciation, 880. 880. Net book value is a difference between the cost and the depreciation, 800 minus 880. Net book value 7920. Motor vehicle, cost of motor vehicle 2740. Depreciation on motor vehicle is 685. Net book value is the difference between the cost and the accumulated depreciation. The difference 2740 minus 685, and net book value 2,055,000. These are the non-current assets. Going to total here and close, total there and close, total but don't close. Then we move on to the current assets. Current assets. The first current asset here is inventory. Closing inventory, note number 4, 36.5 million. 36.5 million. The next one is bank, that is a balance carried forward, that is balance carried forward or balance carried down, 16,735. 16,735. What else? I draw attention to note number 1. All sales were for cash and sales are bank daily subject to retention of a cash float. So that is a cash, which is a current asset, 100,000. So we get the total. We'll add to the non-current assets. I'm moving on to calculate the liabilities. This will give us the total assets. Let me get the total assets. Total assets, I'm adding here the net book values, 20 million plus 7920 plus 2055, 29,975. Going to add the current assets, 36.5 million. 36.5 million plus 167.35 plus 100. 53,335. Total assets plus 29,975. Total assets 83,310. So these total assets are financed by, first of all, we have capital from the First statement we read that Fatuma Ali commenced business with the initial capital of 30 million. So capital here, 30 million. Then there is, we add the net profit for the year, 21,912,000, 21,912,000, 21,912,000, and then before I get the total here, I'm going to deduct the drawings. Drawings from the cash account, we saw that Fatuma Ali withdrew 4 million. 4 million, that is from cash. When you check the last additional information, we read that Ali took goods. Fatuma Ali took goods worth 100,000. These are drawings in form of goods. So we add to the cash, giving a total of 4.1 million. This we deduct. Drawings reduce the capital. So we are going to add the 30 million plus profit 21,912 minus 4.1. So here we have capital of 47,812. Then these total assets were also financed by non-current liabilities. Non-current liabilities. We have one non-current liability known as bank loan. The loan is a non-current liability because Fatuma Ali is expected to repay this loan for a period of more than 12 months. So there is a bank loan on the debit side of the bank statement, 20 million. 20 million. We are going to add current liabilities. Current liabilities. The first current liability is accounts payable. Accounts payable. Candidates, accounts payable, you can see in note number 2, checks sent to suppliers amounted to 2.5. Had not been presented to the bank. Okay? 2.5. Then in note number 1, we read that payments were made to suppliers. So we have we are going to add, as at 31st December 2021, checks sent to suppliers amounted to 2.5 had not been presented to the bank. That means that these suppliers had not been paid, because for the suppliers to be paid, the checks must be presented to the bank. They must be presented to the bank. That means the amount was not deducted from Fatuma Ali's account. So that still remains a liability. But in note number 1, we have those suppliers that were paid. 1.39 million was paid from cash, and therefore the accounts payable will be equal to 2.5 million plus note number 3, invoices from suppliers amounting to 8.6 had not been paid. These are invoices to suppliers that had not been paid. Suppliers had supplied the goods, but they had not been paid. So if they had not been paid, then that's a liability, 8.6 million, 8,600. So you're going to add 2.5, 2,500 plus 86. So total current liability for this account payable 11,100,000. Then another item here under current liabilities, remember the manager's salary. The manager's salary. The manager salary is 2 million per year. From the bank statement, we read that the manager was only paid, that is from the cash, manager was only paid 1,980,000, meaning that there is accrued salary. Or let me write salary due. The same thing. Or salary outstanding. Outstanding salary. Salary, manager's salary due, 20 million. The manager was expected to be paid 2 million, but he was only paid 1,980,000, meaning 20,000 is due. Then from the records provided, there is no account where the manager's commission is to be paid. We read that the shop manager is to receive a commission of 10% of the gross profit. From the bank statement and the cash payment, no commission was paid. So therefore, that commission is also a liability. Commission due, we had calculated the commission due here, 43.78. 43.78. So these are the liabilities. We have the long-term liability, 20 million. Then the short-term liabilities, I'm going to add the short-term liabilities, 111,00 plus 20 plus 43.78. 15,49,8 plus 20 million plus 47,812. So I'm getting here 83,310,000. This is total equity or capital and liabilities. The total equity total equity plus liabilities should always be equal to the total assets. You can see here the total assets 83,310,000. 83,310,000. So that marks the end of the question. We've done part A of the question, 5 marks. Part B, Roman 1 of the question, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. All these marks give a total of 8 marks. All the ticks will earn 8 marks. Then we have the net book values here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. The 16 ticks will earn you 8 marks. These are they 8? These are 7 marks. 7 marks. So, learners, this is a question that tested the candidate's knowledge in preparation of the financial statements from incomplete records. Fatuma Ali did not prepare complete records, did not maintain proper books of accounts. So I want you to expose yourself to various scenarios of improper records. This question can come in various ways. We covered this one in the normal video lectures. We've done several past paper questions in relation to preparation of statement of financial position based on incomplete records or improper books of accounts. And if you have any question, please feel free to send it. Below this video, there is a comment section where you can post your questions, and all your questions will be answered. In our next session, we're going to answer question number 3. I urge you to go through question number 3, attempt it. It's a question testing you on the area of not-for-profit making organizations. This is the financial statements of the organizations that whose objective is not to make profit. Thank you. God bless you. Bye-bye.